It's the classic showdown in the investing world. And with 2025 just around the corner, you're probably wondering which one is the right choice for your portfolio. Are you team ETF or team index fund? Stick around, because by the end of this video, you'll have a crystal clear idea of which one fits your investment style perfectly. So, what's the big deal? Both ETFs and index funds are fantastic tools for building a diversified portfolio without having to handpick individual stocks. They both typically track a market index, like the S&P 500. Think of it like buying a pre-made basket of the top 500 US companies all in one go. The goal is simple: match the market's performance, not try to beat it. This strategy is called passive investing, and it's a proven way to build wealth over the long term. So they sound pretty similar, right? Well, the devil is in the details, and that's what we're going to unpack. Let's start with ETFs, or exchange-traded funds. The name gives you a big clue. They trade on a stock exchange, just like a regular stock. This is their superpower. You can buy and sell ETFs throughout the trading day, and their prices will fluctuate second by second. This gives you incredible flexibility. See a market dip you want to take advantage of? You can jump in immediately. Want to set a specific price to buy or sell? You can use advanced order types like limit orders or stop-loss orders. For active traders or anyone who likes having that minute-to-minute control, ETFs are a dream come true. Now let's talk about another key advantage: low investment minimums. With ETFs, you can often get started by buying just a single share. If an S&P 500 ETF is trading at, say, $400, then your entry ticket is just $400. Even better, many brokerages now offer fractional shares, meaning you can start investing with as little as $1. This makes ETFs incredibly accessible for new investors who are just starting to build their portfolios. You don't need a huge pile of cash to get in the game, which is a massive win for financial inclusion. Okay, onto the other side of the ring, traditional index funds. These are a type of mutual fund. Unlike ETFs, you can only buy or sell index funds once per day, after the market closes at a price called the net asset value, or NAV. This might sound like a drawback, but for many long-term investors, it's actually a feature, not a bug. It removes the temptation to panic sell during a volatile day or try to time the market, which we know is usually a losing game. It encourages a more disciplined, set-it-and-forget-it approach. If you're someone who just wants to invest consistently and not check your portfolio every 5 minutes, this simplicity can be a huge stress reducer. One of the biggest historical advantages of index funds has been their ability to automate your investing. You can easily set up automatic contributions from your bank account, say $200 every month, that go directly into your chosen index fund. This is the magic of dollar cost averaging in its purest form. You're consistently buying, regardless of market ups and downs. While many brokerages are now starting to offer similar features for ETFs, it's a system that has been baked into mutual funds from the very beginning. It makes disciplined, long-term investing almost effortless. Now for the showdown on costs, specifically expense ratios. This is the annual fee you pay to the fund manager. Both ETFs and index funds are known for their super low expense ratios, often just a few hundredths of a percent. For a long time, index funds from pioneers like Vanguard held the crown for the lowest costs. But competition has heated up. Today, you can find ETFs that are just as cheap, if not cheaper, than their index fund counterparts. For 2025, the cost difference is becoming almost negligible. It's a fantastic time to be an investor because this fee war means more of your money stays in your pocket, working for you. Let's not forget about taxes. This is where ETFs have a structural advantage, especially in a regular taxable brokerage account. Due to the way ETFs are created and redeemed, they tend to generate fewer capital gains distributions than mutual funds. When a mutual fund has to sell stocks to meet investor redemptions, it can trigger a taxable event for all the fund's shareholders, even if you didn't sell anything yourself. ETFs largely avoid this, making them more tax efficient. If you're investing inside a tax-advantaged account like a 401k or an IRA, this doesn't really matter. But for your taxable accounts, the tax efficiency of ETFs can make a meaningful difference to your returns over time. So after all that, which one is better for you in 2025? Let's break it down into a simple decision tree. You should lean towards ETFs if you're an active trader who wants the flexibility to buy and sell throughout the day. You value tax efficiency in your taxable brokerage account. Or you're just starting out and want the lowest possible investment minimum, maybe even taking advantage of fractional shares. ETFs are modern, flexible, and highly accessible. On the other hand, you might be better off with a traditional index fund if you are a pure long-term, set it and forget it investor. You want to completely automate your investments and remove the temptation to time the market. The simplicity of once-a-day trading appeals to your investing discipline. You are primarily investing within a retirement account, like a 401k, where the tax advantages of ETFs don't apply. Index funds are the classic time-tested tool for disciplined, automated wealth building. Ultimately, the choice between ETFs and index funds in 2025 is less about one being definitively better and more about which one is better asterisk for you asterisk. The good news is you really can't go wrong with either. Both are excellent, low-cost ways to build a diversified portfolio and achieve your long-term financial goals. The differences are becoming smaller every year. The most important thing is not which vehicle you choose, but that you start investing, stay consistent, and keep your costs low. That's the real secret to success. So, what's your pick for 2025? Are you on Team ETF or Team Index Fund? Let me know down in the comments below. I'd love to hear your thoughts and which one you reusing to build your wealth. If you found this video helpful, please give it a big thumbs up. It really helps the channel grow. And if you haven't already, make sure to hit that subscribe button and ring the bell so you don't miss any of our future content. Thanks so much for watching, and I'll see you in the next video.